What's going on, traders and investors? Bennett Tyndall with tradinganalysis.com. Today is Tuesday, April 13th, 2021, and this is your public market update. So traders, the last time I was with you was actually March 25th, so this is the video from the 25th, and what we were looking at in that particular video was the idea that we had just printed a motive impulsive rally, let's see, from the March 5th low into the February 16th high, and we had just confirmed a wave 2 pullback down here into the March 25th support. March 25th support gave us about a 50% retracement. This was also a back test of the daily 50 moving average, which is a very common, traditionally used moving average with both retail and institutional traders. I gave you an upside target, two upside targets. The initial upside price objective was 4,120.21. Our secondary target included 42.94. Fast forwarding to today's price action, we have successfully reached our initial upside price objective. Our initial target being 41.20 has been reached. You can see we had a high here of 41.48 on today's session. Now, we are just around the corner from summer, and typically summer brings with it very lethargic, low-volume trading. I do expect that potentially this year, but I do see some continued upside momentum here in the indexes prior to any possible summer consolidation taking place. So let's just take a look at the current trend that we are tracking here. And if you tune into our TA Live Wednesday live stream show, which we host every Wednesday, 8:45 Eastern in the morning on Todd Gordon's YouTube channel, we were having a discussion last week and the week prior in regards to breaking Elliott wave down into its most basic of concepts. Because at the end of the day, the Elliott wave count off of the COVID low, off of the March 2020 low, is a bit subjective. And we had a viewer in the chat on the live stream who said, I think you guys are overstating the upside possibilities here and you're discounting, the potential downside, the downside risk. And at the time, Todd Gordon, our CEO and founder of Trading Analysis, said, just take a look at the chart and look for the motive waves. Motive waves are trend establishing waves that establish trends in financial instruments, and counter trend corrections are just that. They go against the trend, they go against the higher degree or more dominant trend, and they're typically very healthy and conducive to longer term upside potential. So what do you really see here with the S&P, even off of the October 30th, or excuse me, the March 2020 lows? The 5-wave trends continue to be to the upside, and all of your 3-wave pullbacks are counter trend pullbacks to the downside, and they've all resolved higher. Okay, so we're still seeing that. We're still seeing 3-wave pullbacks, 3-wave pullbacks, 5-wave rallies, 5-wave rallies. So regardless of what the higher degree wave count is at this time, I think that regardless of what that wave count is, that we will finish this 5-wave rally into the summer. What happens then is anybody's guess. We use the information that we have available at the time. What we see right now is the idea that this 5-wave trend, regardless of where it fits into the bigger picture, is still bullish and still calls for continued upside in the indexes, even with the traditional overextension of some of the more traditional technical indicators. So let me get you off of the daily chart and let's focus in on the entirety of this trend, and I'll give you some new price objectives and targets to be watching for. Off the daily, down to the 1-hour time frame, you can see the yellow circle for context to give you an idea of where this fits in on the daily chart. And what we've got going on is off of the March 5th low, we rallied up in a 5-wave fashion. We have a 3-wave pullback. We can now establish a parallel trend channel. We can take the low from the March 4th. We draw the trend line through the March 25th low. And then you project your parallel trend line over the top of the most recent high, which is the March 17th high. You'll notice that as we broke through the purple parallel trend channel, which is offered from the green minor degree of trend, the moment we broke north of that channel, price action consolidated. We're now moving into the blue third wave price objective at 41.58 to 41.63. We nearly got there today with an index intraday print of 41.48. The way I see this unfolding is we either just completed this green 5 of blue 3, or we will into tomorrow, the 14th. From there, I'll be looking to probably an end of week pullback, and I want to see a fourth wave that I can pair up to this wave 2 here, which I do think will unfold here in blue wave 4. From there, I anticipate a near-term rally into the 4,300 handle. You'll notice inside of orange wave 3, the orange wave 3 1618 is at 42.99. If you decompose the subdivision, a theoretical 61% relationship of 5 compared to 1 in 3 would take you to 42.81. You might be asking yourselves, well, Bennett, why is that theoretical? Well, it's theoretical for two reasons. Number one, we don't know exactly where this third wave will end. Number two, we don't know exactly where this fourth wave will end. You'll notice as I move the fourth wave, Motive Wave is automatically adjusting the fib level for me. This is one of the amazing features of Motive Wave that saves us anywhere from an hour and a half to 3 hours of charting work each day. So another interesting observation is if we do complete wave 3 at the 1618, a 38% retracement into the wave 4 would take you right to the vicinity of the previous fourth wave. That's a very common support zone when you're completing a higher degree trend. From there, I'll be looking to a ramp, as mentioned, to 4,300. Another observation and note about this possible fourth wave pullback down on the 1 hour time frame is if we bring in the mid trend channel of this new gray channel that I brought in for you guys, 38% retracement would be about mid trend channel, and it would also be a back test of the purple channel from the green minor degree of trend. So you'll have two support lines, a fib support line, and I do think that should give us a fairly significant rip to 4,300 in the S&P. From there, we'll be looking for wave 4. Wave 4 with a theoretical completion of wave 3 where I have it. Equality of wave 4 as compared to wave number 2 would basically call for a back test of yet again the broken parallel trend channel. We then get another wave 5 rally. Wave 5 target can take you to a variety of places. I'll be sure to update you guys as this trend unfolds, but we do still see continued upside in the market. And once that comes to completion, maybe the end of May, early June, that's when we're going to be faced with the summer consolidation as a possibility. That's it for me today. I hope you enjoyed the video. Don't forget to tune in tomorrow morning, 8:45 Eastern on Todd Gordon's YouTube channel. If you enjoyed the content, please give it a like. It lets the YouTube algorithm know that you do enjoy it, and it distributes it accordingly. If you're interested in staying up to date with myself and the trading analysis team, we would ask that you subscribe with notifications. And yeah, thank you guys for tuning in, and I will see you all on the next video update. You can check us out anytime at tradinganalysis.com. Thank you guys. See you next time. Take care.